Greetings, grade 12 learners. My name is Mr. Simbi and welcome to today's accounting lesson. In today's class, we're going to be doing budgeting. Here is my lesson map for today. By the end of the lesson, we will address concepts that relate to budgets, preparation of the debtors collection and creditors payment schedules. I'll also do certain calculations of missing amounts. I'll also look at variance analysis. Here are some key words and language that is very important for today's class. Cash budget. It is a budget that shows the expected inflow and outflow of cash. So it means a cash budget focuses on cash. The cash budget reflects the expected balance in the bank during the budget period. It's a forecast of cash receipts and cash payments. But when you look at the projected statement of comprehensive income, it is a financial document that focuses at an entity's expected income and expenses for a future period. Here are some common content and skills errors together with some misconceptions. Here is the pre-knowledge. In grade 10 and 11, you have done something that relates to budgets. Especially in grade 11, you did the debtors collection and the creditors payment schedules, and you also prepared the cash budget. In grade 12, we will do the preparation of the debtors collection and the creditors payment schedule. We will not prepare the entire cash budget, but we will calculate certain amounts that may be missing, and then we'll also analyze the cash budget. Here are the exam writing competences. Dear learners, let's go for an ad break and I'll see you shortly. Welcome back, dear learners, from the ad break. We will now look at certain aspects of the cash budget. To begin with, I'm going to do the debtors collection schedule. Here are some content and skills problems. What is the debtors collection schedule? The debtors collection schedule is used to determine the amount of cash that is expected to be collected from debtors during each month of the budget period. So remember, when we sell to our customers, we sell on cash, but we also sell on credit. When we sell on credit, we expect those debtors to then pay us as a business. Then there is a collection pattern that we also use that will determine how we expect our debtors to pay. Then we will draw up what is known as the debtors collection schedule. So it will now show us the expected cash from our debtors. We're going to do that in today's class. Usually, the debtors collection schedule is prepared before the cash budget is drawn up. And we have an activity here with us, Alice Furnitures. All right? And the information relates to the budget period ending July 2023. Okay. I am going to look at the answer book now. So remember, when you are writing your exam, very key, that when you read the question paper, you need to read the question paper together with the answer book. You must be able to see if there's any missing information that you need to put in the answer book. Very important. And only fill in where you are required to. There's certain spaces that you must not write in. For example, when the answer book is shaded in gray, do not write in that space. Once the space is shaded, it means do not write here. So you only write in the spaces that are not shaded. Here we have an answer book and we're going to complete the debtors collection schedule. And you will also be given the payment trend, or how we expect our debtors to pay. As you see here, we are told that 20% pay in the month of sales, and they'll receive a 7.5% discount. Then 55% pay in the month following the month of sale. Then 22% pay 2 months after. This is very important. And the balance is written off. All right, so to get the balance that is written off, you simply say 100 minus 20 minus 55 minus 22, and it will give you the amount that will be written off. Remember, this is bad debts. Okay, here is the answer book now. So we're going to complete this one. We are given our credit sales here. At times you will not be given the credit sales and you must calculate the credit sales. But in this case, it was given to us. To make it easy, I'm going to show you a very interesting trick. Make sure you get this trick. We are told 20% pay in the month of sales. 20% pay in the month of sales. That means if I sell in July, the 20% will be collected in July. So that makes it very easy now. To complete this faster, I'll come in, then I'll call this 1, I call this 2, and I call that 3. The balance will be written off, so that's bad debts. I'm not going to collect that one. I will not collect the bad debts. So I'm only going to collect in 3 months, 20%, 55%, and 22%. So I call the 20% 1, same month. That means if I sell in July, I collect in July 1. And then I come to the month on top that becomes 2, and the following month becomes 3. If I sell, that means this part here, I am not going to collect in there because it is in 3 months, 1, 2, 3. And here I have my 1, 2, 3. So I can come here as well and say, if I sell in June, I'll start collecting the 20% in June. So I'll come here, then I also call it 1, 2, and then 3. We good? And then if I sell in May, I'll come to May again. Then I'll call May, 1, and then 2. So now you grab your calculator. Make sure your calculator is close because I'm going to do certain calculations with you. Let's start in April. When we sell in April, we sold goods on credit of 882,000. And we know that we're going to collect 55% in the month following. So if we sell in April, we start collecting 20% in April and then 55% in May. That's what we want. So I'll come here, make sure that your calculator is close, and you take your amount, which is 882,000. 882,000, and then we are going to collect 55%. That is number 2. So we're going to collect 55%, multiply by 55. That is going to give me 485,100. So I'll come here, my answer is 485,100. We good? Let's come to the next one. That means I can take the same 882 and I come here to June here now. I'm going to collect number 3. Number 3 is 22%. So I'm coming here and I'll say, so just come back up here and then I'll say, on the same 882, I'm going to collect now 22%. 22%, and that will be 194,040. So I'll come here, that's 194,040. Then I'll come to the 891 in May. So I'll say the amount in May is the credit sales 891,800. So I'll take my 891,800 and then since it is in May, I'll collect number 1 in May. So I'll now say multiply. Number 1 is 20%. Multiply by 20%. That is going to give me 178,360. But I know that there is a 7.5% discount. That means if I say 100 minus 7.5, we will only get 92.5. So I'll then come and I'll then say that amount, multiply by 92.5, 0.925. And then that will give me 164,983. So I'll come here get 164,983. And then I'll come to number 2 now. I'll come to June, and in June, Remember, I'm dealing with the 891 still. So I'm going to say 891, 800. So I'm going to say 891, 800. And then how much am I going to get? Number 2 now. Number 2 is 55% by 55. 490, 490. So I come here, that is 490,000, and then 490. Then on the same amount, I get number 3 now. On the same amount, I get number 3. So I come up here, and then number 3 is 22%, multiply by 22. That's going to be 196, 196. So come here, it's 196, 196. When I come here, when I sell in June, I will not collect in May. So here, there is nothing here. And then when I sell in June, I collect in June 20%. So I'll come here and I'll say, how much were the June credit sales? 921, 200. So that's 921, 200. And I'll get 20%. And of that 20%, I'm not going to get entirely. I'm going to get also 92.5. Then I say multiply by 0.925. And then I'll end up with 170,422. So here it becomes 170,422. And then I come to the month of July now. I'll use the same amount, which is my 921, 200. 921, 200. And then I'm going to get number 2. Number 2 is 55% by 55%. That's 506, 660. 506, 660. Then I come to the last one now. If I sell in July, I cannot collect in May. So there's nothing here. If I sell in July, I cannot collect in June. So there's nothing here. If I sell in July, I can collect in July 20%. So I come here, then I'll now say, in July, how much were the credit sales? 931,000. 931,000. And then how much am I getting? 20%. And then I get 92.5%. 92.5% of that. That is 172, 235. 172, 235. And then you simply add to get your amounts here at the bottom. That is what you simply do. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back, dear learners. Before the ad break, we did the debtors collection schedule and the creditors payment schedule. And then now we're going to do calculation of missing amounts. Here is some content and skills problem. Here we have a question and we're required to calculate number 1 up to number 3. Very important to understand the demands of the examiner. And then here is the first one. We're calculating number 1 here. Number 1 is cash sales. And this is cash sales in the month of July. Cash sales in the month of July. We understand that here in July, we have total sales of 1,330,000. But we are told credit sales comprise 70% of total sales. So that means the 1 million the 1,330,000 is total sales. That's 100%. And we know, as we have been told, that 70% is credit sales. So 70% is, remember this is total, 70% is credit. That means what I want is 30%, which is now cash. So I'll use the what I want. I want 30. I have 100 by 1,330,000. When I punch that on my calculator, I'm going to get 399,000. That becomes my number 1. That is my number 1 cash sales. Let's go to number 2. Let's go to number 2. Remember, when I do calculations, you need to do these calculations together with me. Number 2, we're required to calculate the loan. The loan. You can see here we are under receipts. So that means we've received a loan from Cheetah Bank, and what we're given is the interest here. Let's read the additional information. It reads, the business plans to take a loan on 30 June 2023. This has been negotiated with the bank at 11% per annum. That's the interest rate now. And the interest is payable at the end of each month, commencing 31 July this month. So we've already made the payment. What they want us to do is to get that loan. Now, the easiest way to go about this, when you already have been given the interest, okay, you will simply say, if you want to get the loan itself, you understand that for you to get the interest, you take your loan, multiply by the interest, which is 11 over 100, and you also multiply that by 1 over 12. That is how we get the 5,500. Now we want to get this loan here. To get that loan now, I'm going to show you 2 options. Option A, you simply say your 5,500. Now you multiply that by 100. I'm talking to this part now. 100 over 11. You multiply that also, I come to that part now, by 12 over 1. And it will give you your loan amount. And if you punch this in the calculator, I'm sure it's going to give you the same amount. It gives me here, how much is that? 600,000. So it gives you 600,000. This is option A. Option B of getting this is to simply say the interest that you are paying per month, 5.5, multiply that interest by the number of months in a year, which is 12, and then you divide that by the interest rate, which is 11%. 11% is 0.11. Okay? And then it will give you your loan amount that was received. That is 600,000. All right, let's calculate the next missing amount. That is now number 3 over here. Payments to creditors. Payments to creditors. We are told stock sold is replaced in the month of sale. So the examiner can say the business maintains a fixed stock base. It means one and the same thing. Whatever we sell is what we buy. So we look at our cost of sales to ascertain the amount of stock that we're going to buy. Okay. And then we're told 80% of stock is purchased on credit, and creditors are paid 2 months, that is 60 days after the month of purchase. So if we're going to pay in July, we therefore need to look 2 months going back. All right? So if we are in July, we have to count 2 months. 1, 2. So I'm going to come to May. If I purchase in May, I will pay that 1 month, 2 months, so I pay it in July. So I look at the cost of sales now in May. And the cost of sales in May is 910,000. That's my cost of sales in May. And then I'll now say, of that 910,000, I know that 80% is purchased on credit. So I need 80% of that. I need 80% of that. And once I get my 80%, that is what I pay to my creditors. And in this case, it's going to be 728,000. 728,000. That becomes my payments to creditors. Okay. Let us now come to what we call variance analysis. Here is some content and skills problem. Variance analysis. It is the process of evaluating the differences between the planned, we're talking budgeted financial performance, and the actual performance. So we budget, we plan, then we compare it against the actual, what has really happened now. It involves identifying and understanding the reasons for these differences to help businesses manage their finances more effectively. Analyzing and interpretation and comparison of actual and budgeted figures. This is what we're going to do now. Management will use the existing information to monitor and control the business operations. All right? Now, the difference between the actual and the budgeted is referred to as the variance. Okay, and then now we have an activity here. And it says, Kyla extracted the following actual and budgeted figures for May. Comment and quote figures on the effectiveness of advertising. So, we budgeted advertising, that is 35,280, but the actual advertising was 35,280, so it remained the same, constant. When you look at the effectiveness of advertising, you would think, okay, so since we budgeted 35,280 and it remained 35,280, that is good. But remember, the question is talking about the effectiveness of advertising. You can only see if advertising is effective if it brings an increase in our sales, because we advertise to have an effect on sales. Now, if our advertising remained constant here, the same, but our sales have declined from 882 to 705, 600, that now begins to raise eyebrows to say the advertising remained the same, but the sales has gone down. Could it be that our advertising was not effective? Yes, indeed. So, you will see that even though there is no change on our advertising, it remained the same at 35,280. That is between the budgeted and the actual. Now, when we come to look at our sales, you can see that there's a decline in sales there. If you say 882,000, that was the budgeted, minus the 705, 600, it will give you an amount that is 176,400. That is the difference now. If you divide your 176,400 by the budgeted, which is 882,000, multiply that by 100 over 1, it will give you 20%. So, advertising has remained constant, but our sales have declined by 20%. What does that mean? It means advertising is therefore not effective. So it means when I look at expenses such as advertising, I don't look at them in isolation. I need to marry them. I need to couple them. I need to twin them up. They go together. Sales and advertising. So there are particular items in your cash budget that need to go together. For example, your sales here and your advertising need to speak to each other. All right, I'm going to go to the next one. Okay, so it's the same information. And now we come to the control over delivery expenses. So we need to see, are we controlling our delivery expenses or we are not? And to help me explain that, you see that your delivery expense is lower than the budgeted. Okay, so we had budgeted to spend 57,330, but the actual is 51,200. So it is lower by 10.7%. Okay. While sales has declined by 20%, remember we calculated the 20% already. So you can see that your delivery has declined by only 10%, yet your sales have declined by 20%. The next question you ask yourself is, what were the deliveries for? Obviously, they were for the sales. So if our sales declined by 20%, we would expect the same decline in delivery, 20%. However, delivery only decreased by 10%, and sales had a huge decline. It therefore means that there was no control over our delivery expenses. Required. Complete the debtors collection schedule for the period 1 May 2023 to 30 June. Very key that you understand the demands of the examiner. Don't assume to know what the examiner wants. Read the question, understand it. And always, as I always say, when you read the question paper in the reading time, read it together with the answer book. You're correct. Okay. And then let's see where we're supposed to complete. Now, one of the most important things is you do not write in the shaded areas. Once you see it's shaded, it's saying don't write here. So the shaded areas that you see in my answer book, we're not going to write there. One of the first things that we're going to do is to calculate our credit sales here. All right. And to calculate that credit sales is very easy. There's several ways in which one could have done this. One of the ways is to come here. We are in June and we're given the budgeted sales, which is 8 million. And we're told 75% of all sales are on credit. So I'll then take my total sales, which is 8 million here. And then I'll say my 8 million, I need to get 75%. And 75% there is 6 million. So here I get 6 million. Okay, so I am done here. There was other ways that you could have done it. I just wanted to show you the quickest way here. And then you will then come and start collecting. We're told 60% is collected in the month of sale. In the month of sale, less 4% discount. And then 30% in the month following the month of sale. 8% 2 months after the month of sale. So I know here it's going to be 1, here it's going to be 2, and here it's going to be 3. So I have 1, 2, and I have 3. The key part is the month of sale. So I'll come here, I know June, same month, 1. Then I go on top, 2, then I come here, and it's 3. All right, so I come here, May, 1, 2, I go to the top, that becomes 3. Okay, so calculators need to be ready. So I'm only going to do the parts that are not written in. So I'm coming to get here, April. How much am I going to collect in May? I'm going to collect number 2, 30%. So I'm coming here and I'll say, how much are the credit sales in that month? 5,625,000. 5,625,000. And what percentage am I going to get? 30%. How much in total is that? 1,687,500. So I'll come here. That's 1,687,500. Then, with that same figure, I can still get that one there. All right? So I'm showing you a trick how to be fast in the exam. So I'm going to come here and I'm now going to say, I'll just come up on my calculator and I'll say, that same figure, I'm going to collect 8% in June. So I come here, then I get 8% of that. That's 450,000. So I come here, then I say 450,000. Did you see that one? Okay, let's come to the next one then. Then I'll come to May. When I sell in May, I'm going to get 60% in May. So I'm going to come here and I'm going to say on my calculator, how much are the credit sales? 5,887,500. What percentage am I going to get? 60%. That's 3,532,500. But I know that there's a trade discount of what? 4%. So that means on my 100% that I'm supposed to get, I'm going to allow a discount of 4%. That means I'm going to get what? 96%. So I'll come to my answer, then I'll now get 96%. And that will give me 3,391,200. So I'll come here, then I'll say 3,391,200. Like that. And then I'll come now to the month of June. And in the month of June, I have my credit sales again, remember? So I'm going to say 5,887,500. Then, what percentage am I going to get in June, the month after? I'm going to get 30%. Then I say, multiply that by 30%. That's 1,766,250. So I come here, that's 1,766,250. Just like that. And then, with your calculator, you add these ones. And then you're going to get your 5,492,700. You do the same again here, and you get your 5,672,250. Remember, these amounts will be shown now in the cash budget. This is how you can do the debtors collection schedule much faster. Let's see if we can get another question. The next question then says, calculate the amount of discount to be allowed in the month of May. The amount of discount to be allowed in the month of May. In the month of May, we have credit sales. Here are the credit sales in the month of May. That is my 5,887,500. That's my credit sales in the month of May. In the month of May, I will get 60% of that. So I'll come in, then I'll get my 60%. So I'll come and say, here's our calculator, and then we'll say, the credit sales is 5,887,500, and we will get 60%. That is 3,532,500. Okay, so I'm going to bring it here. That is my 3,532,500. Then we are not going to get the entire 60% because we are allowing 4% discount. So we are going to get 96%. And the discount that we are going to allow is 4%. So we just get 4% of that figure now. Okay, so I'm going to come and I'm going to get 4% of this figure by 4%. That will give me 141,300. So I'll come here, that's 141,300. This is what we have allowed as discount. 141,300. Okay, we're going to move on to the next question. And the next question requires us to complete the creditor's payments schedule. And this is from the Limpopo Prelim for the year 2023. This one, let's do it quickly. All right. So the first one is to get your credit purchases for July. How do you do that? To get the credit purchases for July, here is my July. And I have my budgeted sales, which is 990,000. I've been told credit sales comprise 60% of total sales, but this is my total sales. Goods are sold at a markup of 80% on cost. I need that one now. So I'm going to now say my 990,000, which is my total sales, I want the cost. So I'll come and say multiply by 100 over 180. On my calculator, let's see how much I'm going to get. So I'm coming here to say 100 over 180. Then I multiply that by 990,000. That is going to give me 550,000. So I come here. My cost of sales becomes 550,000. Now, stock is sold in the month of sale. Stock is sold in a month, is replaced in the same month. So it means the same as the business maintains a fixed stock base level. It means one and the same thing. Whatever we sell is what we buy. And then credit purchases are 40% of total sales. So I want credit purchases. So I'll come now and say the 550,000, then I get 40% of that. So I'll come here and then I'll say of my 550 by 40%. And that will give me 220,000. That becomes my credit purchases. So I come here, that is 220,000. 220,000. And then I am going to pay for the month of July. That is what I'm required to do. We are doing for the month of July. So If I buy in July, will I pay in June? So you will see that here I'm not going to record, here I'm not going to record, and here I'm not going to record anything. Okay, so if I buy in July, when do I start paying? 50% in the month of purchase. So the credit purchases in July, I will pay how much? 50% in that month. So I'll come here, then I'll now say, of the 220,000, I'm going to pay 50%, multiply by 50%. That's going to give me 110,000. But I will receive a discount of 7%. That means I'm going to pay 93%. I'm going to pay 93%. So I'll come again and I'll say multiply by 93%. And that is going to give me 102,300. So I'll come here, that is 1 or 2, 300. That is in July. And then I'll come to the month above. If I buy goods in June, I'll pay 50% in June and 35% in July. So I'm looking here now. So I'll say 212,000. Then I multiply that by 35%. That will give me 74,200. So I'll come up here, then that will be 74,200. And then, if I buy goods in May, I will pay 50% in May, and then I'll pay 35% in June, and then I'll pay 15% in July. So I'll come here, then I'll say 196,000. I'll say 196,000, multiply by 15%. And that is going to give me 29,400. So I'll come up here and I'll get my 29,400. Then I can add all these three to give me my total payments, which is 205,900. 205,900. And remember, this amount will also appear on the cash budget payments to creditors. Dear learners, let's go for an ad break and I'll see you shortly. Welcome back, dear learners, from the ad break. Now we are going to calculate certain missing amounts. Here we have 1 up to 4, and we stand to win 12 marks. And here we are required to calculate the discount allowed. The discount allowed. Now, if we are to calculate this, it is very important to understand that you have an extract of information from the projected statement of comprehensive income. All right? And you want to know the discount allowed in the month of November. And the easiest way for you to do that, you would simply say, how much of your credit sales do you have? But you are not given that information. What are you given? You are given cash sales here. You're given cash sales. And you are told here that credit sales comprise 60%. That means cash sales comprise 40%. So I'll come here. What I want is credit sales. But what I have is cash sales, 40%. So what I want is 60. And what I have is 40. 60 over 40, we multiply that by the 434,000. And then that will now give me my credit sales. And then the amount that I have here is 651,000. That is my credit sales now. When I have my credit sales, I know that 40% is collected in the month of sale. So I'll come here, then I'll get 40% of that now. And the 40% of that is 260,400. Then I will not be able to get the entire amount because 40% is collected in the month of sale, but they receive 5% discount. So that is the discount allowed that I want. So what I want is 5% of this amount. So I'll come here and then I'll say, it is my 260,400, and then I want 5%. 260,400 by 5%. That gives me 13,020. So I'll come here. My answer to that is 13,020. That is my answer to number 1. We good? Should I go on to number 2? Let's do number 2 together then. Let us do number 2 together. And it reads, the savings account will be increased by 84,000 on 1 December. So there's an increase here. So that means my interest here must be more than 1.2. And then interest at 4% per annum is not capitalized and is receivable at the end of each month. So it simply means my interest here is going to increase by the interest that we are going to get from this new amount. So if I can know how much interest I'm going to get from this new amount, okay, 4%, and I know this is monthly by 1/12. And then once I do that, my interest here is 280 rands. So I was getting interest of 1.2 before I introduced this new amount. Then I'm going to add now the 280. That means how much am I getting now? 1,480. So the idea here was to know that you must calculate the new interest amount that we're going to get from this new amount that has been invested. So the examiner can do this with the savings or even a loan that we've acquired, a new loan. At times they say we've repaid a loan. It's more or less the same principle. Let us now move on to the next question. And it reads, refer to information G, that is the budgeted and the actual. In order to increase sales, Adam decided to change the way in which the salespeople are being paid each month from November 2023. The salespeople agreed to the change, explain the changes that Adam made. So here you are required to have a critical mind, a mind that can see the old things that were there and now begin to look at the new thing. What new information is there in the actual that was not there on the budgeted? Okay, you can see that commission to salespeople. So, what changes did Adam made? He introduced a commission to the sales staff. All right, so he has decided on a smaller or reduced fixed salary. He was paying them 165 here, but is now paying them only 20,000, and then the remainder is paying them on commission. That is one change that we can see that Adam has made. Now, the question continues, and it says, explain why some of the salespeople regretted their decision to agree to these changes. Now, these kinds of questions require you to have a critical mind. You have to apply your mind when you see such questions. Why would some of the salespeople regret their decision? So you need to look at the figures and not just look at them, but critically look at them and get information from these figures that may be hidden. Okay, so why would some of these people regret? Number one, the fixed salary plus commission, so we're talking about these two figures here, gives you 161,050, but this is less than what they were getting here, which is 165, which they earned previously. This is 3,950 less than the previous month. Okay? And then their contribution to total sales is that you can see that here your total sales, it was 1,085,000. Now it's 1,410,500. And who has contributed to this increase in total sales? The salespeople. So they have contributed to an increase of 30% above the budgeted. Yet they are now earning less. That's why they are regretting. So you must be able to look at the effect of the sales amount on the new approach. The new approach says you get paid on commission. So the salespeople had to work harder. That led to an increase in sales, as you can see here, from 1,085,000 to 1,410,500. However, they are now earning less. That would lead them to regretting on their decision. And then they attracted 160 more customers. You can see here there were on average 480 customers, but now it's 640. So the difference here is 160 new customers, which is 33.3%. How do you get that? You simply say 160 divided by 480, multiply by 100 over 1. That gives you 33.3%. So there is 33.3% more customers than the budgeted. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back, dear listeners, from the ad break. Here is the lesson map recap. We have done the debtors collection schedule. We also looked at the creditors payment schedule. We also calculated missing amounts and we did variance analysis. Here are some keywords and language recap: cash budget and the projected statement of comprehensive income. Here are some critical and common errors. For further exam practice, I want to encourage you to look at these past exam papers. Remember, with accounting, you need to put in the hours to get the best results. Until next time, enjoy your studies. It is goodbye.